Hey folks, Bob Desmond here, the Contrarian Trader, and welcome to Best Stock Charts for the coming week. Before we go to the charts, I want to talk about economic data and our opinion about this overall market. We're turning more and more bearish on the market, definitely cautious. We've been that way for several weeks now. And last week we began building short positions and we did it right into resistance. And now we're going to be looking to add more if we begin to see new weekly lows this coming week. So members, I'll be sending out trade alerts. And also members, I already posted the week ahead commentary in the members area, so go check it out. A lot of the commentary I'm going to discuss now, I've already gone over yesterday on the week ahead commentary. So economic data that is driving our opinion, most recently anyway, was the data that came out last week regarding retail sales. Retail sales came in with a miss. They came in at a negative 0.2% versus an increase of 0.1%. It gets worse. When you back out autos, the retail sales numbers just took a nosedive. The expectation was for a 0.7% increase. It came out negative 0.1%. So all is not well with this economy, despite the fact that consumer confidence rose to above average on Friday. Now, why might that be? Why are we seeing delinquencies rise on auto loans? Why are we seeing retail sales decline? Perhaps it's because people believe that they can refinance the high amount of debt they get with a new rollover of a 0% financing or a low interest rate financing, so they can keep this merry-go-round, this hamster wheel of spending going? Probably. Because once those offers to roll over your debt expire and you then have to pay a prevailing rate of 17% up to 25% on a credit card, the average consumer is going to find themselves in a world of hurt. And it goes the same for the U.S. economy. If they ever allowed interest rates to normalize to above 3%, on average about 5% on the 10-year yield, the amount we pay on our debt would challenge the amount we spend each year on our defense spending. So it's impossible to maintain both, meaning letting rates adjust to normalized levels, historic levels. Why? It's because we have so much debt, $22 trillion in debt and rising. It's just bad, folks. So what we're doing is we're looking at the gold stocks, we're looking at the mining stocks, we're looking to take advantage of anything that will do well in an economy that is under pressure with yields that are artificially low. And the Federal Reserve has said they're going to let inflation rise. They're going to let the economy run hot to an on average of 2% inflation. That means that they're going to allow inflation to run to about above 2%. And if they ever decide to cut interest rates, you're going to see the dollar tank, and you're going to see gold and the gold stocks rip through the ceiling. And that's what we're preparing for. So let's segue over and into the charts. We're going to kick things off with a brief sponsorship endorsement, and then we're going to go into member stock chart requests and then our watch stocks for the coming week. Enjoy. All right, so we're going to break up the chart analysis of the symbols that we're going to review into two different segments. The first segment is going to be member stock chart requests. That's where we review the symbols that our gold members submit for me to review on video, and it prepares them for the next trading day. And my opinion helps to validate or invalidate an opinion that they may have. And many times, given the fact that I have some very intelligent traders that are part of our community, the trades that they're asking me to review look pretty good as potential trades, and they become a part of our watch list. The second part is going to be our best stock charts for the coming week, and we'll do an overview of those symbols. I did a deep dive on the week ahead commentary with members that is currently posted in the members area on the website. So before we get to the charts, let's pay the bills. I want to talk to you about our partner, our sponsor, TrendSpider. TrendSpider is the next level in automated technical analysis. What attracted me to TrendSpider was their usage of multi-time frame analysis, meaning you can, on one simple chart, suppose you're using a daily chart and you want to see where support and resistance levels are on a weekly basis, and or on a monthly basis. All you need to do is click a button. It's as simple as that. You have push button Fibonacci. You have heat maps, which show you where support and resistance levels are. Candlestick pattern recognition. And you can also back test your strategy on any one particular symbol. TrendSpider is a powerful tool. Automate your technical analysis because the competition at the big trading houses are already using it. Now it's affordable to the little guy. Take advantage of coupon code CT25Z. If you're watching this video on YouTube, click the link below. It'll take you over to their website. If you watch this on the blog, click the link above. It'll also take you over to their website. Again, coupon code CT25Z. Let's get to the charts. All right, so Apple is going to be the first stock chart request that we go over. And what I like to do is go over a weekly overview first to see where we've been. It'll imply where we may be going and how we closed out the week. So when you take a look at Apple, what I'm seeing here is a bit concerning for a couple of reasons. One is that we are quite possibly putting in a lower high. Two, we have broken down below not one support level, but two support levels. And more importantly, on a weekly basis, we have closed there. Volume last week was very high to the downside. Lower highs, RSI, MACD histogram losing momentum. So there's a lot that is concerning about Apple. Now let's bring up TrendSpider to validate or invalidate my thoughts on support and resistance levels. It's picking up a support level right here where we bounced last week at, let's call it the 182.85 level. Support below this level is going to come in right here at around 176. Now, taking a look at Apple on a daily basis, here's that bounce off of weekly support in dashed line now. We rallied off of the support level. We found a bit of resistance right here. So we're inside of a trading range. If we break below last week's lows, we're coming down here to around the 176 level. So I wouldn't suggest buying these shares right now. I would wait for a retest of the support level. If it breaks, wait for it to come down to 176, then we could revisit the chart to see how it may be holding that support level. Too much risk with overhead supply above at resistance, and these topping tails on top of these candlesticks imply that we may break to make new lower lows this coming week, or at the very least retest last week's lows. So I think it would pay to be patient here. The next chart up is Canopy growth. Canopy growth on a weekly basis is a bit concerning. We did hold support last week, but you're seeing RSI, which had broken out during the week of April the 15th. It is now rolled over and broken down to make another lower high. And we could quite possibly break down to new lower lows this coming week. Now, we did close, let's call it at support. Volume is very light, below average. Possible third lower high here on Ultimate Oscillator. Stokes are very, very ugly. We have put in a lower high and now a lower low, at least on the fast line. MACD histogram, not looking good. So these shares appear to be under some pressure. Let's go to a daily chart. So you could see that on a daily basis, we are holding on by a very thin thread. We did break the support level on May the 13th, but we managed to pop back up and recapture it. The question is, does it hold? And if it does not hold, in all probability, we are going to come down here to the 200 period moving average, which is technically not a support level, just a rising moving average, which could act as a pseudo support level. But in reality, where we want to see the shares pull back down to is down here to the 40.56 level. That would make for a good risk reward entry point. Let's validate that on TrendSpider. Now look at the chart on TrendSpider. Canopy broke down below weekly support here last week. We're not seeing much in terms of support levels below, but when you use the heat map, this functionality here is pretty cool. All right, so we know that in all probability, if we make a new weekly low, we're coming down here to this buffer zone of support between $43 to $42 per share. I think that personally we could probably head a little bit lower using our technical analysis using stockcharts.com. We'll go back over there in a second, but the heat map here gives you a pretty good idea of where you should begin to see a defense. What this heat map is validating is our analysis of the chart we began with of CGC, because the heat map is implying that we have support between $43 and $42 per share, which is not bad, because when you go back to stockcharts.com, weekly chart, if we make a new weekly low, we'll probably head back down to what was the upper band of a bull flag setup, which should now act as support if this stock is to remain healthy. And where is that price target? Right between $42 and $43 per share, and declining. That should be noted. It is declining. So if it takes a few weeks, we may get down to $42, maybe $41 per share. Let's go to a daily chart. Now, on a daily basis, we have our Stokes, which are rolling over. RSI, lower highs, probably lower lows. A bearish key reversal on Friday. Now, the trend spider support showed support in here at $42 to $43 per share. I think that there's a good possibility that should we break that support, ultimate support will be found here at, let's say, $40 per share, give or take a few dimes, a possible overshoot, and then we'll be looking for a bullish key reversal, and then we could look to open up a long trade. I would not short these shares right now. Too much support below, too much risk, not enough reward, and this sector is really in a big growth phase. I wouldn't want to fight it. The next chart up, JB Hunt weekly chart. So JB Hunt is in the transportation sector, which has been extremely volatile of late, and the transportation sector has been a leading indicator of as to where the markets may head in the future. Now, JB Hunt had an up week last week. We did find resistance at 97.50. RSI is holding support. We are down below the 50 level, so that's a caution flag. A warning flag is on the track with RSI. And traditionally, Stokes put in a double bottom, an extreme double bottom, meaning they rally off the lows like back here, and then what do? They roll over and put in lower lows. Same thing back here. So be careful of JB Hunt. The trend is clearly to the downside. We're trying to find support here, but if history is any guide, these Stokes will in all probability roll over, and that puts into threat this support level here. If we break down below last week's lows, we're going a lot lower, probably down to 81.84 per share. We'll go over to TrendSpider in a moment to see whether or not we have any other measurable support levels that we would want to consider prior to 81.84. But as it stands right now, that would be the support level to watch. Let's go to a daily chart. Yeah, this is not pretty. You had a reversal day on Friday. Clear resistance above here at $98 per share. Obviously lower highs. I would not be a buyer of these shares. Let's go over to TrendSpider. Okay, so the daily chart with a weekly overlay of resistance in dashed line and support in dashed line as well on a daily chart shows that we are obviously in a downtrend channel as represented by the dashed green lines. Now, if we break down to a new weekly low, the next support level is going to be down here at around 88.50 per share. Now, this is a declining downtrend line. So if it takes several weeks to get down to retest the support level, it could easily be at our 81.84 support level, which we used on stockcharts.com. So I'm comfortable with where we would want to get involved with JBHT at historical support at the 81.84 level. So that's the price target I would be looking for if we break below this support level. Now, taking a look at JBHT on a 4-hour basis, this is pretty interesting in that we, using these heat maps, we broke down below support, We've rallied back, and you can see that this $97 per share level is acting as really stiff resistance. We simply can't close back above it. And it appears as though, given this, again, rejection in the final 4 hours of trade on Friday at the $98, $97 per share level, in all probability, we're going to break this coming week and head down lower, again, to retest the lower band of support. And this is a 4-hour chart, but we're still using the weekly overlay to reflect where there is historical support on JBHT. Let's bring up VRTX. We'll go with a weekly chart first. Okay, so you could see from a weekly view that we have a problem here. And that problem is this, is that every time we rally up and into, let's call it 175.60 thereabouts, we're rejected and we're forced back down to defend this lower band of support in blue. Now, this is weekly support. Now, if this support level breaks, in all probability, we're coming down here, which is a declining downtrend line, and at current, that's at around 153.62 per share. Now, you can see here in dashed line, this is monthly support. Note I have weekly and monthly overlays here for trend lines. Let's take a look at a daily chart, weekly overlay. All right, so it's obvious here that if we break down to new weekly lows, we're going to see a measurable drop down to this lower band of support here on VRTX. Let's go over to stockcharts.com. All right, so if we break last week's lows, this is where I think we're going, right here, to this lower band of rising support at, let's call it 156, 155. Perhaps we'll get an overshoot. These Stokes are weak and getting weaker. This is a weekly view. Let's go to a daily chart now. Now, looking at a daily chart, you can see that we actually broke out last week. But again, we were rejected at resistance. We pulled back on Friday with doji star formation, sign of a decision. We now have the 50-period moving average is trading down below the 200-period moving average. That's a bearish divergence. You know, despite the daily breakout here, I think there's way too much resistance above for me to go buying these shares. If you're going to go buying them, you need to use a stop loss right below this support level here, 166.08. Why there? Because that would mark a breakout point failure. That means that this breakout would have failed, and in all probability, we are going lower. So VRTX, a lot of risk, not enough reward here, so I would avoid. Now we're going to segue over and into our watch stocks for the coming week. And how I work this out with members is that I do a deep dive of the charts, which is already posted on the members area on the week ahead commentary. The week ahead commentary is where I review the health of the overall market, going over all the major indexes. We discuss where the markets have been, and I give my thoughts on where I think we might be going. Then I segue over and into our positions, what our strategy is, and then I go into a deep dive of our watch stocks. And a deep dive is that we review not just the daily charts, but weekly charts, perhaps intraday charts, etc. And what first we discussed is why I like the setup, and then we go into what we need to see the shares do in order for us to become involved. But in best stock charts, what I'm going to do is I'm going to give a cursory overview of the charts, why I like them. And the first chart up is going to be ARVN, weekly chart. We are trending higher. Last week, we flashed a reversal week. We did retest the lower band of support. And what I'm looking for here is a breakout above this upper band of resistance. Volume last week declined versus the prior week. There's not a tremendous amount of data here for the indicators to send us a signal. The stochastics and RSI appear to be flattening out and poised to hook up. So that's a good thing. ARVN is looking good. We did a deep dive into the daily chart of ARVN on the week ahead commentary. Again, posted in the members area. Members, if you're watching this, just go to the members area, watch the week ahead commentary, and get the deep dive. Next chart up, Netflix weekly chart. The best that can be said about Netflix at this point in time is that it's in a trading range. Other than that, things are setting up fairly bearish for Netflix. The reason being is that we have stochastics, which are rolling over or have rolled over, and we've taken out prior lows. On price, we have an all-time high, 423.21. What do we have now? A lower high. This is not what you want to see when you're looking to buy a stock. You want to see higher highs. Also, last week, we broke down below a lower band of support. Volume was fairly light last week. These indicators are very, very weak. Williams percentage R has broken down to new lower lows. MACD will probably go negative this coming week. So if you couldn't tell already, we are looking to short Netflix, and I go over what Netflix must do for it to become a short on the week ahead commentary posted in the members area. The next chart up, RAD, Rite Aid. If you're somewhat skeptical of this market right now, you may want to look at the consumer staple plays, Rite Aid being one of them. This is a beaten up stock. It showed strength in the face of a fairly weak market last week. You had the S&P 500, which was down last week, yet the shares of Rite Aid closed up over 14%. So a good week. We were stopped at weekly resistance. So am I saying that Rite Aid is good to buy right now? No, I just think that there's a good possibility that we have found a bottom. And on the week ahead commentary, I talk about not only the daily chart and the weekly chart, but also the monthly chart, because it illustrates where we have historical support as well. And why I think that we may have, in fact, bottomed on RAD, and we will probably trend a bit higher in the coming weeks. Now, taking a look at Ultimate Oscillator, it's looking interesting. We have higher lows. We entered a trading range where we're holding support. We're looking for a breakout here. And then, of course, my favorite event is the ultimate retest of the breakout point. So long story short, we may not be long of RAD next week because we are in a bottoming phase, and I'd be looking for strength. And in the week ahead commentary, I lay out the scenario that we should see or we should look for us to want to get involved with Rite Aid. So RAD looking good from a macro perspective. The next chart up, SRDX, weekly chart. This is a potential short. Another one where we did a deep dive on the weekly and daily charts on the week ahead commentary. Weekly basis, we have RSI, which is putting in a rounding top, as is the stochastic. And it's no shock, right? Why? We broke support last week. In all probability, we are heading lower. We are looking to short SRDX. The trend is clearly down with lower highs and lower lows. Volume last week was above average. So again, we walked through our scenario of what SRDX must do to become a short on the week ahead commentary. All right, the last chart we're going to go over here is BIDU, BIDU. This is an extreme oversold trade. BIDU closed out Friday with RSI at 15.18, making it very attractive. And what we spent a lot of time on with BIDU was the weekly chart, because the weekly chart shows us where there is historical support below. And that's where we would want to buy. So you must know the answer to that question before you get involved with these shares, because in all probability, we are going to head a bit lower here. Volume on Friday was extremely high. So clearly institutional distribution. They tried to rally it. It was rejected. We closed down below the 2 standard deviation Bollinger Band. Let's bring up the 3 standard deviation Bollinger Band. And I'm sure we closed down below there as well. And there you have it. All right, so not good, no bueno. In all probability, we're not going to stay here long with RSI with a 15 handle and trading down below the 3rd standard deviation Bollinger Band. That does not mean we can't go lower. Members, we talked about our support level of where we would want to enter BIDU on the week ahead commentary, so go check that out. It is already posted in the members area. And that is it for this week, folks. If you watch this on YouTube, please subscribe to my channel. If you watch this on the website, enter your email address. We'll send you out a couple of free trade tutorials. We hate spam too. Everybody enjoy the remainder of your weekend and have a profitable trading week. Be well.